Hey guys, so today I want to address, I think, what is one of the most important questions when it comes to something called a chart breakout. And first of all, I want to quickly define what that actually is, what constitutes a chart breakout, and then we'll talk about the importance and the significant, but respecting the time frame that you're looking at. I think I see a lot of people, both on the retail side and even on the institutional side, that are really mixing time frames, and that's what leads to a lot of non-profitable trades, or at least trades that aren't as profitable as they could be otherwise. So let's have a quick look at this through the lens of a chart. So at the very simple terms, a chart breakout is, as it basically says, is if you, let's say you have a line of a reference point, it's in this case this orange line, if you start breaking above there, that will be what's called a breakout. Now, I think that's a simple term, and of course the details or the nitty-gritty here are what's important. That gets us right to the time frame question. So what I'm going to do is, because as you can see, if you look at the bottom of this chart, this is a multi-year chart. I'm going to turn this from a daily increments chart to a weekly increments chart, which basically just means that each one of these bars now that you're looking at here, these little red and green bars, are representing 1 week of price action as opposed to 1 day of price action. And that's adequate, or appropriate, I should say, it's a better word, for this for this sort of a time frame. So what we're looking at now is a stock that you can see that has a reference point up there in 2018 at the time, around, let's say, $150 to kind of make it a round number. And you can see that that reference point was tested several more times. Once there, and almost 2 years later, then again a bunch of months later there, and then a whole bunch of times here over those most recent periods. And so this period, this reference line, which is again the orange line, which roughly lines up with that $150 level I just mentioned, is offering overhead resistance. So one of the things that I see a lot of people do, I don't want to say wrong, but do it in a very sort of low probability way, is start mixing time frame as a reference before, and let's talk about what that means. Since we're looking at a weekly time frame here, what we would want to see in order for this to be a successful breakout is for the weekly chart, meaning on a weekly closing basis, not on an intra-week basis, but on a weekly closing basis, we'd want to see one of these bars, one of these candles, to be closing somewhat meaningfully above this trend line, so above roughly $150 as we referenced to before. What does somewhat meaningfully mean? Well, that's a difficult, and it's specifically a difficult way to define that because it depends on the volatility of the instrument. So for lack of better terminology, I would say, let's say at least a few percentage points, 3, 4, 5%, to kind of make a simple rule. And again, it doesn't apply to everything because everything's got different volatilities. But on a weekly closing basis, you'd want this stock to be closing, again, let's roughly say 3 to 5% above that sort of reference point. So basically that would mean if $150 is that reference point, you'd want this stock to be closing, somewhere at least around $155 on a weekly closing basis to constitute a breakout. And that would constitute a breakout on this chart, since this is a multi-year chart looking in weekly time frames. Now, what people tend to do is they'll look at this long-term chart, but they will start treating this on a daily basis. And they'll start looking at a daily chart, and then they'll say, okay, well, the daily chart is now at 151 on a closing basis on this, really what's been a multi-year trend. And so they're applying completely the wrong time frame to what has been a longer-term base. What you can't do, or at least in my opinion, in my experience, is start using a one-day price action to something that's been in the process of, on this chart, almost 3 years, actually 3 years specifically, in the making. So a one-day time frame to a 3-year time frame makes no sense. But a multi-week time frame, or at least a weekly chart on a multi-year chart like that, makes a lot more sense. So if you guys have any questions or comments on that, please let me know. Give us a thumbs up like if you enjoyed this, if you want more videos like this. But this is an important discussion to be had. And again, if you find yourself mixing time frames, if you're mixing your 5-minute chart breakouts on a daily chart, that's just as nonsensical, for lack of a better term, as one would use if one were to use a daily chart on a multi-year breakout, right? You really want to give it at least a weekly closing based breakout on a multi-year chart as you would on any other time frame in the respective sort of increments. So I hope this is helpful, makes sense, and we will see you in the next video.